Hello everyone, this is your host Vaibhav. In today's session of Daily Stock, we are going to consider the financial quarterly earnings of the John Deere and Company, which is the primarily manufacturer of agricultural equipments, tractors, and allied equipments are included, and it has presence um, Japan in the east, to the US in the west, and even in India, my home country, I usually see these companies' products in the market. It has widespread presence across the world, and the earnings are also on the similar line, where its earnings are in the ballpark of US dollar $10 billion with the net income of little below the US dollar 2 billion mark, which is a substantial figure. The only thing is that in the last couple of quarters, the earnings aren't really growing. Rather, there has been a slight decline. And if we look at the first quarter's net income of US dollar 1.75 billion, which is 10% below the earnings of the same quarter a year back. So there has been decline because the revenues have also declined. So the company is trying hard to maintain its market share and grow the business. But if we consider the macroeconomic scenario where the market is now moderating, or you can say cooling off from the peak levels of 2022 and 23rd, there is this decline, and in that context it doesn't really feel like a big deal. And I feel that in the coming quarters, the things are likely to stabilize. The company is also taking the initiatives to grow its market shares and align its product offering to the requirements of the consumers in these changing times. We now look at the highlights of the earnings. For that, let's go to the consolidated statement of income, where we will get a good idea in a comparative manner. There is the quarterly report for the 3 months ended January 28th of 2024, and we are comparing these figures to the 3 months ended January 29, 2023. If you look at the total net sales and revenues, the net numbers are at US dollar 12.185, which are 4 percentage point lower compared to the revenues of US dollar 12.650 a year back. And coming to the net income is 11 percentage point lower. So this is a substantial decline and much more than the decline which we are seeing in the revenue, because the cost is not really declining in proportion to the decline in the revenue, because for any OEM, the original equipment manufacturer, there are certain fixed costs which are incurred regardless of the level of sales, and as the revenue decline, the fixed costs are not really going to decline, and that is also one factor which explains this difference between the decline in revenue and the magnitude of decline in the net income. Coming to the consolidated statement of income, the EPS is also on the lower side in comparison to the EPS of US 6.58 a year back. So no matter which way you look at it, there has been moderation in the sales, and that is showing up in this decline of net income for the company. But I don't really feel this is something to worry. I I consider this to be part of the business cycle, and we are off the peak, and things are likely to stabilize in the coming quarters. Let us look at the cash flow statement so we will get a good idea of where the money is coming from and how the company is spending its cash. If we consider the quarter's cash flow, you can see that the operating activities haven't really provided much cash. Instead, there has been decline from the operating activities of $908 million, which is below the decline from the operating activities for the same quarter of 2023. But the investing activity has provided $1.2 billion of cash, which is higher compared to the $760 million addition provided by the investing activities a year back. The collections of receivables have added substantially to this increase in the cash inflow. If we look at the collections of receivables for the same quarter of 2023, there was a figure of 7.2 billion. Now it is higher by 550 million, and that has contributed to this higher net cash inflow from the investing activities. Now let us dwell on the cash used in financing activity, which is substantially higher in comparison to the cash used a year back, because this time around the company has decided to pay for short-term borrowings at a much increased pace of US dollar almost 3 billion, and that is pulling the company's figure on the lower side. Otherwise, if we look at the proceeds from the borrowings issued, these are higher, substantially higher, almost close to US $2.8 billion dollars. Difference is there, but still, because the company is also making the payments in the short-term borrowing, there is this decline. In other numbers, there is not much of a difference. The payments of borrowings have also gone up, and if we look at the repurchase of common stock, it is going at similar pace, more or less. It is not substantially different. The dividend payment is of US 386 million. So all in all, this has resulted in the cash and cash equivalent of the company dipping by more than 2.3 US dollar 2.3 billion US dollar, which is a big figure. But still, even with this higher decline, the stock of these short-term investments, the cash and cash equivalents and restricted cash, is at the comfortable level for the company. So there is no concern regarding the immediate liquidity for the company, as it has more than ample reserves at hand to sustain and finance its day-to-day business operations. Now let us go to the technical side of the story to see how things have been shaping up on the charting side for the stock. If we look at this consolidation phase for last almost 2 years, since the first half of 2022, we have seen this consolidation within the range of 300 on the lower side to 450 on the higher side. I feel this time also we have a pretty good possibility of Gire and Company's stock price again reverting towards prior swing highs after finding support closer to these immediate swing lows. So that's why the title is Watch Out for 300, because that is one key price zone which can make or break the price direction for the Dire and Company's stock price in medium term as well as in the longer term. Now, in immediate price trajectory, for immediate price trajectory, we will have to see if the stock is able to hold close to or above these immediate swing lows. The price zone of around 350 is going to be crucial. So if after closing this week on the lower side, if in the next week the stock doesn't really dip much, in that case only we will be in a position to feel confident about further growth in coming days, coming weeks. But if it continues to slide and there is a big move on the lower side in next week as well, then I think that will shake the confidence of the short to medium term investors. And even though the long term investors are not really likely to be swayed at this point, but still the trajectory from short term to medium term perspective will become distinctly bearish. So it is very, very important for this decline which is going on in the current quarter to stabilize and the stock to hold ground in the vicinity of 350. And if it does that and there is no substantial decline in the next week, then I think after a week or two, we can even think about going for a long trade. So the next week, keep an eye on the stock price of the DD and company stock, and things should not really go on the bearish side just yet, but you never know. Stock is already 20 percentage point below its recent peak, so we can't really rule out that possibility either. So I would say that we will have to take a cautious approach and decide about the trajectory only after we have further clarity. Now let us reduce the candlestick period to hourly to see what is the story on short term. In the short term, the formation has been continuously of lower lows and lower highs. So we can't really go for any new trade either because you can't even sell on these low levels. There has already been a substantial decline since the release of its earnings, and that limits the scope for immediate profit making in the short term. Because even if we go for a short sale trade, keeping up with the momentum, we are not really sure it won't go sideways, and if it goes sideways, then in that eventuality we will only be ending up losing money instead of making money. So for us again it is going to be imperative for a for data and company stock to consolidate, and maybe after it consolidates and doesn't really find much buying on these lower levels, we can initiate new short sell trades. But for the time being, it is better to keep the powder dry and wait for better opportunity. From medium term, I feel the shorting opportunity was there couple of sessions back now that the earnings have been released, and there has already been a big move on the lower side. The only thing which we will have to think about is the risk reward ratio. The momentum in the short term is clearly bearish with a strong possibility of further dip below this immediate swing low of 355. So the price zone of around 350 can be visited again by the stock in next few days. That possibility looks quite strong, and only after it touches those price levels, and if it does hold the ground closer to 345 350, then maybe we can think about other possibilities of a reversal on these lower levels as well. But right now, the momentum is strongly bearish, and only thing which we can think of is to go short in the data and company stock. But then the question of risk reward ratio comes into play, and we will have to wait for better opportunities purely from that point of view. So that's my assessment looking at the price formation of the Durant company. Prior to this, we also saw its quarterly report, which is also showing slight moderation, slight decline in its revenues as well as in its net profit. and similar undertone is also there in its stock price performance, which are not overtly bearish, but this is not something to buy at this current juncture as well. So we will need time for things to stabilize and provide us with a better risk reward ratio. Now it's time for me to sign off for the day. If you have found the session useful and informative for your trading and investing purposes, do write to me in feedback. You can like and subscribe to the channel. We have equally informative and interesting sessions all day long on these academy, so you can watch for those sessions as well. Thank you all for joining in. Have a fabulous day ahead. See you next time around. Till then,